Let's take a look at the emerging market space in particular. Are emerging markets behind the curve when it comes to fighting inflation? Is the brick beta trade over? These are questions you need to ask if you're investing in EMs. Let's ask the man himself. Wahid Shamas is co-portfolio manager at Janus Emerging Markets. The emerging market story, is it still intact?
Well, I think the easy money is definitely over. I mean, right now we have global imbalances of monumental proportions. You know, you've got the U.S. leading developed markets and trying to reflate at any cost possible. At the same time, and that's the problem, it's a simultaneous aspect of this, the emerging world, led by China, is trying to deflate and yet do it with a soft landing. That's a very tough act to push through. And so what we need is some level of rationalization on both continents. Both need to make the very tough sacrifices.
Have regulators in the States given emerging markets a helping hand? We saw the move on the COMEX to increase margins on silver. That's taken some heat out of the commodity space. The CME today also hiking margins. Could this be a positive for emerging markets trying to deflate?
I think in the near term, absolutely. There's obviously a lot of money flow going into these commodity trades, but you know, let's call a spade of spades. There is a huge reflationary action going on in the U.S. and in some parts of Europe, and frankly, let's tackle the ingredients of this, because China is trying to fight inflation, but raising rates and reserve ratios is not necessarily cutting it, because a lot of this inflation is being manufactured outside its borders. And so I do worry about inflation, and I do worry, frankly, about leverage in the system, because when you constrain leverage this way, bubbles are emerging elsewhere, sort of the gray market lending, so to speak.
If a lot of the inflationary pressures that China's grappling with are generated outside its borders, a big one-off appreciation of their currency, the renminbi, would that do the trick?
Absolutely. But, you know, Geithner and Congress are obviously very impatient with currency and the appreciation levels. But at the same time, and nobody's really focused enough on this, a lot of emerging markets are also growing impatient with the developed markets in not having enough fiscal austerity and not getting their balance sheets in order. It's one thing for the Chinese to revalue. Now, frankly, they've done some. I mean, they've done 5%. What exactly has the developed markets done in return in terms of real fiscal austerity? And that's what I would pose as a question.
It is a key question. You know, when we look at the emerging market space, central banks all seem to be doing a very similar policy tool, pushing on the lever to stop inflation, lifting interest rates. But you make the point, it's not easy to lump all these markets in together. There are very different factors at play here. What does that mean when you're investing in these markets?
Sure. Well, you know, you asked me at the beginning. It's going to be very difficult, given that we're so global now and everybody's interdependent on one another. We only got out of the crisis 2009 when everybody came together and did what I call coordinated policy. We actually need coordinated policy now to break this imbalance that I'm talking about, so that when emerging markets do fight inflation, they're doing it with a tailwind behind their back and not a debasement of other currencies, so to speak. And so the risks are real, but I am unfortunately bearish. It's a stock picker's market now, because I don't see that imbalance going away.
Wahid, this is a perennial question, I guess, but how would you position in Middle East, North Africa, amid this continuing turbulence politically? Clearly, though, there are some longer-term opportunities here, if and when we do see stabilisation return.
Thanks for the question, Sri. You know, I think in conjunction with the easy money being made, I think the days of going to a country, call it Brazil, and I'll get to your point in a second, and, you know, looking at a Petrobras and looking at a healthcare company, retailer, and picking your favorite stock and benefiting from that brick phenomenon, I think those days are over. So you asked me an interesting question. When you look at the stock level and you really conquer a sector, you know, if you're a petrochemicals analyst, right, and you're looking for the best petrochemicals company globally, I mean, how could you not stumble on a SABIC in Saudi Arabia? So does SABIC have a lot to do with Saudi? Sure, they get very cheap naphtha and they get a lot of cheap natural gas and feedstock. But at the end of the day, it's that company in its locale that is creating value. And it's been creating value for, I don't know, the good part of the century, the past century. And I don't see the politics necessarily shifting that. So there are lots of opportunities, to answer your question, in the Middle East. To the extent that a country starts destroying value, then you have to worry about the politics. But if it has things in control, then you can look for real value creation opportunities in any country, frankly.
Okay, we'll talk about some of them coming up in just a bit when we continue with Wahid Shamas from Janus Emerging Markets.